Good morning, traders. It's 8:01 a.m. Chicago time on Tuesday, the 7th of November, 2023. Thanks for joining us this morning. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, digging into the conversion trading pre-market summary sheet here, the overall tilt of the market risk-wise, overnight risk exposure is mild to slightly risk off. The Russell, the Dow, kind of leading us down. The Nasdaq dragging us higher. The Nasdaq is the only major index that's positive right now. We had There's, there are a couple things on the news, not much. This is a digestion week. There really isn't all that much to be concerned with as the market just sits here and figures out, is this rally for real or not? So we had a few earnings yesterday that are of note. There wasn't anything incredibly significant this morning. We did have UBS. UBS Group came in missing their earnings, as one would expect with UBS, by 241%. Came in at a loss of 24 cents versus a return of 17 cents. DR Horton beat by 13%. Uber missed by 16%, came in at 10 cents versus 12 cents expected. Constellation Energy beat by 59%. And then after the close today, we have Ecopetrol, Occidental Petroleum, Gilead, eBay, and others. That's what's up. And then as far as the key events, we had China's balance of trade yesterday, came in much weaker than expected. Balance trade came in at $56.53 billion versus $82 billion. Exports also worse. They fell by 6.4%, quite significant to the expectation of a fall of 3.3%. What's interesting is imports were supposed to fall 4.8%. Imports rose 3%. So China here, being an export nation, the world's manufacturer basically is exporting less than it's importing currently, which is unusual for that country. The RBA interest rate decision came in with a raise 25 basis points, relatively dovish comments from them. This morning we had German industrial production came in worse at negative 1.4 versus negative 0.1 expected. China foreign reserves came in a little bit to touch higher. And then European PPI came in at 0.5 in line. The year-on-year also came in line. And then what's left, balanced trade also from the U.S. worse than expected. And then from here, we have Fed's bar in about 10 minutes. We have Fed's Jeffrey at 9:50. We have Fed's Waller at 10. We have the IBD tip economic optimism indicator at 10 as well. Total household debt at 11. Fed's Williams at 12. And then we have a 3-year note auction at 1. Fed's Logan at 1:30. Consumer credit at 3. And then API crude oil stock change at 4:30. And then the Japanese Reuters Tenkan index at 6 p.m. for Japan. That's what's ahead of us. Balanced auction in the overnight session, completely balanced. The volume's still quite low versus last week. We have 183,000 contracts, all traded below yesterday's close. So the inventory is 100% short. Not looking as bad as yesterday did on the right before the open. 15.5 points is better than yesterday's 12.25 points, and then the point of control shifted down slightly to 43.76. That's what's out there. Let's take a look at the big picture here. What this is kind of a these profiles are combined profiles. This is not a some of these are single profiles, many of these are combined profiles. And what we see here is that we balanced out down here between 42.15 and 41.22. So we spent a couple days here, and then we broke out. We tried to retest the high of the balance. We missed it by 2 ticks, 42.15.50. And then from there, we had this day that kind of triggered off the rally, multi-distribution profile, the market closing away from the point of control. So very clear sign of imbalance to the buy side. The next day, we gap up, we open at the low, and multi-distribution profile, multi-distribution trend profile. We can see that the yellow line here is the initial balance, the first hour's range. And we can see that we closed at the top of the range, at the point of control, multiple times the IB high. This is what's called a trend day. Trend day type. And a trend day type generally portends or precedes a market that continues higher. What the trend day type tells us is that the market has not, with a close like this, the market has not found the opposing side. And then what I have here is a profile that combines yesterday and the day before, and you could see how completely balanced the action is. Here's what it looks like separated. These are the days separated. So there's your 42.15. I considered all of this imbalance here. And then we have these 2 days that are on top of each other that are completely balanced with each other. And we have a gap below, right? Below 58. We have a gap to 37. And then we have a gap from 42.93, 94 down into 42.65 or so. Pretty weak structure down below, in my opinion. And we are right on in this kind of a balanced rectangle that we drew yesterday. Oh, I wish I hadn't done that. Now it's loading a crap ton of data, and I'm at home, so I don't have a gig of bandwidth here. It's a lot slower at home. So it's going to take a while. But what we've done is we've balanced, and then yesterday we closed near the value high of the 2-day balance. So what this is telling me, based on what what it did yesterday, what it's telling me is it's still, buyers are still strong. They're still getting the job done, but it's starting to weaken. And it makes sense that it weakens. Remember, the target to the upside is right up here. This is our target. This is the balance point. Oh, let me switch. This is the balance point right here. You see that point of control? This is an MC point of control, an MC volume point of control, both at 4,400 and 4,402. And to me, it's not likely to be done testing to the upside until we get into and kind of check that. So I'm still looking to the long side as long as the one-time framing remains in play. In other words, yesterday's low remains in play. Yesterday's low was 43.64 and a quarter. A little bit higher than a 43.60 the day before, or 58 the day before. So as long as that stays intact, let's see, did it get it done? Yes. As long as that low stays intact, we're still one-time framing up. Yesterday was an inside day, so this is compression. Compression or coiling can be described in 5,000 different ways, but the way I look at it is, how is price discovery happening within the prior auction, and how is the volume or profile distribution? And so what you have is light-ish volume, and you have complete balance. You could see that the value area here is very much valid, right? Very Gaussian profile. Let's erase that. So very Gaussian. It's got a bit of a tail to it, but very Gaussian. And so you have this value area that's relatively well established, right? So we have yesterday's value area from about 86 down, depending on whether you use volume or TPO, to 76, or in my opinion, really 76 is the better price, 76.75, call it. And we're opening in range in value today. This is really a compressing currently. And what happens with compression is you get compression, you get compression, you get compression, and then you get imbalance, right? Don't know which way, things are leaning to the buy side given the one-time framing up. So we have to consider this to be the primary and this will be the secondary. But as the market compresses and there's just kind of dwindling, the daily volume has fallen pretty dramatically. Let me see if I can pull that up here in my composite. Hang on one second. Composite. Opening up my composite chart. So here, I'm going to show you this kind of long-term composite chart using a different piece of software, using Investor RT. And there's your volume. We're coming in on the daily, and you can see our volume is falling off. And if we look at the overnight volume, so I'm switching the chart to overnight, and you can see that all of a sudden there's a big step. You see that? We've been hitting 300,000 contracts a night for a long time. You can see that 300,000, which is right here, is every bar down here. Oh, here's the line for 300,000 right there. You can see we're hitting 300,000 throughout. Okay, and then all of a sudden, Monday comes in, here's today. All of a sudden, it steps down to about half that. Maybe not half, maybe about 60% of that. And to me, this is just saying that, the irons are already in the fire, and things are, things are already in play. And what's likely to happen is that it compresses. Remember, for every contract in futures that is bought, there's a contract that's sold. There's a participant that has sold one and bought one, and another one has bought one. So somebody's always going to be off sides once the move happens. So as it compresses and consolidates, one side is likely to be wrong, and that side starts to push prices directionally. So for today, though, given yesterday's action, if you look at yesterday's broken out profile, which is how I like to look at the market intraday, like that, you could see that, A period did a pretty good, we opened right here. A period did a pretty good test up and down. B period made the auction symmetrical about the open. So the open is now at the mid, essentially. Then C period extends up. D period is an inside period, double TPO high, and then it breaks to the downside. And to me, that's when you start to, once D period got broken to the downside, that's when you start to favor the short side. We're below the open. We have unsuccessfully tested and retested the high. We're looking to the short side. Short side gives out. Boom. Nice little move. Approximately 15, 16 points. But what happens then is you get this inside bracket, I period, and then J period breaks down. It looks like, oh man, looks like we're going to take out that 58 and maybe end the one-time framing up. This is the first sign that buyers are giving up territory. Well, that's wrong, because K period comes in and takes it all the way back through the open to close above the open, giving us a positive bar for the day. Pretty lackluster battle yesterday, and it's expected to be lackluster today. Expecting the same sort of action today. So as we sit here on this island with two balanced days, just be aware that your point of control is right here at 81.82. We're opening at 80 currently. So another day that you should be keeping your hands off the market early on. Let it set up a little bit. Crude taking a pounding, and I've been talking about this for some time, that it's very likely to test and retest the 80. It's done that and failed to hold. But overall, crude was just euphoric. It went too far, too high up to the 94, and now it's breaking lower out of bounds. Quite bearish. So what do we look at for crude? Let me see if I have the overview chart. So crude has cleared a key area, and we go. Oh, I didn't load. Okay. When we look back on crude, there's quite a bit to contend with. The key target now is around 78.08 is what I have marked in my notes as the next key target down, right down here. And it's falling into this balance zone back here. So crude is coming into this balance right in here. Remember, we don't select the tails. So it's coming into this. And what is the point of control of that balance? Well, it really is around 78.08 in crude. The NASDAQ, it's breaking out, but the NASDAQ, remember, has been lagging. It's breaking out to the upside. It's actually finally coming into the balance that the ES is already in. We'll see what happens here with the NASDAQ. The NASDAQ is showing us some strength. The ES still remains within yesterday's range, so we'll see if the NASDAQ becomes responsive and comes back. The NASDAQ has balance at 15,200 is the balance point for the NASDAQ. Okay, so we'll see how that goes. I'll leave you with that. Good luck today, and I'll catch you tomorrow morning. Take care.